Today, we're going to be talking about the long history of insurance in Canada and how it's grown and changed over time. Insurance companies are one of the four pillars of the financial system in Canada, which include banks, insurance companies, trust companies, and pension funds. So here's a quick summary on each so that we're all on the same page. Banks, what they do, they accept deposits and they make loans. They offer things like bank accounts, credit cards, loans, and mortgages. It's pretty simple. Insurance companies provide protection in case things go wrong. And the insurance industry in Canada is split into two parts. There's general insurance and life insurance. General insurance covers stuff like car insurance, condos, business, boat, and stuff like that. It covers things. Life insurance covers people. So it provides protection against things that physically happen to you, like getting sick or injured or passing away. Third, we have trust companies. Trust companies specialize in trusts and loans and investment activities. Often a trust company holds the money that underlies other investments and other services. They offer things like personal and business loans, and they have trust services for customers. And lastly, we have pension funds. Pension funds are long-term investments that are offered by either a company or the government, and they provide retirement income for employees. And there's generally two types of pensions. There's defined benefit pensions and defined contribution pensions. There used to be more defined benefit pensions, but now most of them are defined contribution. So my company, Safe Pacific Financial, we're in the life insurance world. So that's what we're going to talk about today. Life insurance is actually older than Canada. There are some life insurance companies around today that have been around since before Canada became a country in 1867. So at that time, insurance companies were included in the very creation of the Canadian financial system. And because of this, life insurance has a special tax advantage that you can't get anywhere else. And the key one is that life insurance is tax exempt and the growth inside an insurance policy is tax deferred. So what does that mean? This means that when life insurance pays out, the payout is tax-free. So if your parents or grandparents have a life insurance policy, that benefit payout from that policy will be tax-free. And the tax-deferred part means that when you put money inside a life insurance policy in Canada, that growth is tax-deferred. And this means that you don't pay taxes on that growth until you withdraw it. So this includes whole life policies and universal life policies. It also includes policies that you would hold personally and policies that you would hold inside a corporation or a trust. And this is very powerful to know, and most people don't know how it works. So now that that preamble's done, let's get started talking about the long history of insurance in Canada and how it's grown and changed since the beginning. Most importantly, how does it benefit you? The first life insurance company in Canada was the Canada Life Assurance Company. You know it today as Canada Life. It was founded in 1847. Canada Life is still around today, and it's got over $500 billion in total assets under administration for over 17 million Canadians. We work pretty closely with Canada Life, and actually, they recently bought the agency where we process our business, and it's called Financial Horizons Group. Another interesting bit of life insurance history in Canada has to do with Canada's first Prime Minister, Sir John A. Macdonald. In 1887, after serving his term as Canada's first Prime Minister, he actually became the first president of a brand new insurance company called the Manufacturers Life Insurance Company, which today we know as Manulife, or in the US is called John Hancock Insurance. Another interesting date in Canada's financial history is 1917, when Canada introduced the Income War Tax Act, which we now just know as the Income Tax Act. So if you're super nerdy, the original income tax was 4% on anything above your personal exemption of $1,500. So this was supposed to be a temporary tax to pay for World War I, but it was made permanent in 1949 after World War II. So that's a little bit of history on the life insurance industry in Canada. Life insurance is an important financial tool for Canadians, provides financial security and peace of mind for families in the event of the unexpected. Life insurance companies in Canada paid out $14 billion in death benefit in 2020 and over $36 billion in health benefits and over $46 billion in retirement benefits, all in 2020. So roughly about $100 billion in payout in a year. Today, we have dozens of life insurance companies operating in Canada, and we work with most of the big ones. So from its beginnings in the 18th century to the current position as a key player in the financial system, life insurance has played an important role in protecting the financial well-being of Canadians for over 250 years. So that's it for me today. Today was one of those nerdy videos that's probably not going to rack up 1 million views, but it's interesting and it shows the history, depth, and security of the life insurance industry in Canada. If you got any value from today's video, please like it, leave a comment, or share it with somebody so that the algo pumps it and puts it up higher up in the feed. Of course, if you want to talk about your insurance, message me directly here or on our website at safepacific.com. And I will see you next time.